Yes, Vishal, you can
Yeah, yeah.
start.
Welcome members to the today's virtual meet. Today we have a topic fundraising through SME IPO and Mainboard IPO, private equity and opportunity for CAs. Also, the practical experience will be shared by our own member Ravi Ramaiya. We welcome today's speaker Ivor ji. We have with us a guest of honor today who will give us the keynote, Ms. Yogita Jadhav ji, General Manager SEBI. We welcome Abhishek ji. We welcome Ankur ji. Yogita ma'am will tell us about the activity at SEBI and the role of the SEBI in respect to the SME IPOs and fundraising, different types of fundraising. I request Yogita madam to please share the views and give the keynote.
Thank you. Am I audible?
Before that, you have an institute motto, please.
That is
Yes,
audible
Pradeep.
now?
Yeah, it will
Am
be
I
audible.
audible?
Just give us a minute.
Ma'am.
It's audible. Pradeep,
yes,
you
yeah.
can start.
I will start it just a second.
Everyone, please raise for the institute motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, Pradeep. Before I request ma'am to give keynote, I request Pradeep to please present e-moment to ma'am. Thank you, ma'am.
Thank you.
Please give your keynote, ma'am.
Okay, shall I begin now?
Yes, ma'am.
Yeah. Very good afternoon to all of you. Actually, I'm happy to address this study circle meeting of Borivali CP Study Circle. I'm given to understand that today's session covers aspects related to fundraising through IPOs, mainly the Mainboard and SME, your private equity fundraising, as well as fundraising options through NCDs, that is a non-convertible debentures. As we all know, chartered accountants form an important part of the financial ecosystem, which enables companies to raise funds from public. Our regulatory framework relies primarily on professionals and institutions, such as merchant bankers, your auditors, registrar and transfer agents, banks, depositories, and exchanges. If you have a look at the fundraising through IPOs over the last few years, it's a very interesting trend. We can see that over the last few years, it has gathered much momentum and steam. This is demonstrated by the fact that during the last financial year, that is the FY 21-22, a total of rupees 1.12 lakh crore were raised as compared to 31,000 crore in the previous year. Also, the number of companies which have raised money through IPOs has also increased significantly over the last few years, with 120 companies raising money in 2021-22 as compared to just 55 in the previous year. Similar trends were also observed in rights issuances by companies. Now, I hope everybody here is definitely conversant with the framework for public issuances. I hope that, but just to give a flavor of it, the current regulatory framework for public issuances in India is mostly disclosure-based. It's termed on a disclosure-based regime. Thus, the public issuers like your IPO, your FPO, that is the further public offerings, the rights issuances, require of filing of an offer document. Now, this offer document necessarily needs to contain with it various details necessary for the investor to make an informed decision. Well, I'm sure that the speakers after me shall cover this topic on the regulatory framework with much more detail and granularity. Let me just highlight some of the key aspects which are actually required to be disclosed in the offer document, and which we in SEBI, while processing our offer documents, also lay great emphasis on these parameters. So now these details are also available in our SEBI ICDR, that is Issue of Capital and Disclosure Requirements Regulations. It's a recent regulation, 2018, it was reviewed. It is also known as the ICDR regulations. First and foremost comes the business of the issuer company. This covers in detail the various details of the business of the company, such as your plant, machinery, your assets, basically technology, products, services of the company, your business strategy, existing collaborations for raw materials, etc. Next, which is an important parameter, is definitely the capital structure of the entity. It is an important section which shows the authorized capital of the company as well as the entire build-up of the capital of the company. Details of all past issuances, the various nature of allotments, the number of shares allotted, issue price, etc. are some of the areas that are required to be disclosed. Post-issue capital structure is also required to be disclosed in order to provide the impact of such issuances on the capital structure. Also, further issue of capital is prohibited after filing of the document, unless such issuance is already highlighted in the offer document, which is already filed. So, in between, the filing of raising of fresh funds is not allowed. Another aspect here is the disclosure of issuance of shares out of revaluation of reserves. This is again a very important thing to dwell upon, because if such shares have been issued to a promoter, then such shares are ineligible for computation towards the minimum promoter contribution. Next in line comes the risk factors. Now, these are essential risks that one must go before investing in the issuer company. Now, there are two types of risks which emanate: the internal risk factor and the external risk factors. Internal risks are definitely all those risks which arise from majorly due to operations of the company or are related to the regulatory framework under which the company is regulated. External risk factors are, of course, mostly macroeconomic factors, geopolitical conditions, considerations, which can impact the investment sentiments of the issuer company. Again, one of the most important parameters is the financials. The offer document filed must contain consolidated financials for the last 3 financial years or for any stub period. This is the requirement as per ICDR. The financial statements in an offer document should not be older than 6 months. The FI section of the offer document is divided again into 2 parts. We have the restated financial information and other financial information. The restated and other financial information should be complete in all respects. And mind you, we at SEBI give, you can say, a paramount importance to the financials. If the financials are not in the order which has been prescribed in the ICDR regulations, we have been constrained to reject, I would say reject, but we have not taken such offer documents on board in the past. The financial statements now are required by restated to ensure consistency of presentation, disclosures, and accounting policies for all the periods presented, including the stub period. The financials are required to be audited and certified by the statutory auditor or auditors who hold a valid certificate issued by a peer review board of ICAI. One important aspect that I would like to highlight here is that if a new auditor holding a valid peer review certificate is appointed for the stub period and the preceding auditor did not hold a valid peer review certificate at the time of signing the last annual financial statement, then the last annual financial statement would again need to be re-audited by the new auditor in accordance with the applicable standards. This is the norm which we at SEBI are following. The other financial information, of course, includes your EPS, your return on net worth, EBITDA, NAV per share. Again, objects of the issue is important because this is the main reason why you're towards which you are raising the funds. This section provides for the various heads for which the funds raised to the public are intended to be utilized. In case of an IPO involving only offer for sale, however, this section carries no significance because the proceeds of the issue will naturally go to the selling shareholder. Basis for issue price. Disclosure of some qualitative and quantitative parameters is extremely essential in order to justify the issue price, the basis for the issue price. Quantitative parameters include your traditional EPS, diluted EPS, your price to earning ratio, your average return on net worth for the last 3 years, NAV per share for last FY, and its comparison with the issue price. Qualitative factors include your various other parameters such as the market share, your average revenue, average order size, etc. I shall touch upon these more a little later. Again, important section is the litigation section, because this section details all the litigations, whether civil, criminal, disciplinary action, regulatory actions, any enforcement actions pending from other regulators that are going on against the issuer company, the directors, promoters, and subsidiaries. As we all know, primary markets are an ever-evolving field, and they require regular policy interventions to ensure market integrity. I would also like to highlight some of the recent measures that we have undertaken or which are under active consideration of SEBI. The first is the review of the preferential issue framework. Well, the preferential issue is not a public issue. However, SEBI has issued certain guidelines under the ICDR regulations for preferential issuances by the listed company. Pricing in case of a preferential issue, in case of shares of issuer company whose shares are frequently traded, they are now based on the higher of the VWAP, that is volume weighted average of 90 days or 10 days, or 8 to 6 months. However, in case of the shares of the issuer company, if they are infrequently traded, then the price determined by the issuer shall be on the basis of valuation parameters, including your book value, your comparable trading multiples, and other such parameters as a customary for a valuation of shares. The issuer company in such cases is required to obtain a certificate from an independent registered valuer. Of late, again, I think you all must be aware that in view of very narrow price bands, which companies were coming out during the IPO process, SEBI took a serious note of this practice, and we have now mandated a minimum price band of 105% of the floor price. Now, why is this helpful? This is helpful in having a meaningful price discovery through the big book building process. Anchor investors are institutional investors who subscribe to an issue before the issue opens to public, but after the price band has been announced. The shares acquired by such investors in view of the assured allotment used to undergo 30 days lock-in. So after 30 days, they were free to sell it. But however, SEBI thought that there should be more skin in the game for all type of investors which are there. So in order to improve the skin in the game for such investors, such class of investors also, SEBI has now increased the lock-in period to 90 days for half of the shares allotted to the anchor investors, and the remaining half continue to be locked in for a period of 30 days. So that flexibility is there. Now, again, one important measure which SEBI has taken is the allocation methodology for NIIs, who are also known as the HNIs. Now, that has also undergone a significant change. Earlier, while it was on a proportionate basis, that is proportional allotment used to happen to the NII category. Now, it has been shifted to draw of lots, like in the retail. Now, the idea is why draw of lots is was to avoid crowding of overallotment by the large HNIs. So everybody should be benefited. That is the idea. Key performance indicators. Now, this is something which I think the CA community would also be interested in. This is an upcoming review that is under consideration, active consideration of SEBI. Many new age tech companies, as we all know, they're also called as NATCs, that are tapping the primary markets are primarily loss making. And so traditional parameters under the basis of issue price, which I had just mentioned a bit earlier, your EPS, your return on net worth, or they do not provide a complete picture in respect of such NATCs because of their business model. They're not a typical traditional brick and mortar companies. NATCs and the trend is NATCs generally remain loss-making for a longer period before achieving break-even, as these companies in their growth phase opt for gaining scale over profit. Now, the trends in key performance indicators of such companies is an important aspect which merits disclosure and can be considered as one of the basis for issue price. So henceforth, in case of any TCS, if they're coming out with a public issue, the basis of issue price will not only cover your traditional ratios, financial ratios, but also something called as a key performance indicators. A detailed consultation paper in this context is already available on our website. I would urge people to please go through it. And I would also like to take this opportunity to highlight some of the challenges with respect to the disclosure of KPIs in the offer document. Now, what are these? Whether KPIs should be certified or whether they should be audited, and if so, by whom? Certification by statutory auditors, will it be enough? Should KPIs be certified, audited by independent chartered accountants? So these are some key questions which are challenges which we are again trying to grapple. There are also challenges with respect to auditing the non-financial key performance indicators, because many of these KPIs will not have your typical financial ratios or indicators. And towards this effect, actually SEBI and ICAI are also working together towards resolving these challenges and creating a detailed guidelines for auditors. I must say that CAs are the gatekeepers for the corporates, the companies, and the financial conscience keepers basically. So I would, it was my sincere request that the CAs imbibe the culture of true reporting in such corporates, so that especially in offer documents which are being filed, if the CAs are engaged, so that maximum transparent key disclosures are made to the investors, so that the right type of issuances get right type of investors. And I would really like to thank the CPSC to give me an opportunity to talk on this subject. With this, I would like to conclude my initial thoughts on this subject. I hope this session covers in details many aspects in fundraising. Actually, it's a very vast, and the whole day will be incomplete for that, especially on financials and the role of auditors in fundraising through public means. I would also encourage each one of you to actually engage, again, as I said, with the issue companies in a bit of understanding their business and raising red flags at opportune time. I wish all of you very best for your bright future. Thank you so much.
Thank you, ma'am. Thank you, Yogita ma'am, for sharing the different rules, regulation, and policy initiative taken by the SEBI for the new issues, IPOs. I thank you very much, entire team, for sparing your valuable time and enriching the knowledge of the member. I request Sme Vijay to please give a hearty vote of thanks to ma'am and team.
Thank you, Vishal, for this opportunity of proposing a well-deserved vote of thanks to our keynote speaker, Ms. Yogita Jadhav. She has taken us through the various aspects regarding the series, like what are the internal risks, external risks, what are the financial requirements in case of ICD or violence, what are the various norms, what are the litigations, be it civil or criminal, then what are the recent measures which the SEBI has commit, like in case of preferential issue, blocking period, then anchor investors. Madam, we assure you that we are not only the gatekeepers, but we are the soul and whole for the any financial things which happen in India or in the auditing sector. We take the entire responsibility, and rest assured that you will not face any problem from the CA side.
Thank you so much.
Madam, we are thankful to you for accepting an invitation, and your keynote address was very valuable. So on behalf of Borivali Central CP Study Circle, I propose a well-deserved vote of thanks and request all the members present to carry out with a virtual applause.
Thank you, ma'am.
Thank you.
Now we will start with our second sessions on the topic of fundraising through SME, Mainboard, private equity, opportunity for CA, along with the learnings from personal experience of SME listing by consulting firms. We have two speakers, Ivor Misquith and CA Ravi Ramaiya. Now I request Pradeep to introduce both the speakers. Ravi, you are on mute.
Thank you very much, Vijayji, for giving me this opportunity to introduce both the speakers today. Well, first we have with us CA Ivor. Ivor is a business leader who provides strategic advisory and business process re-engineering expertise to local and global firms. He assists all companies in creating and executing business strategies, raising finance, scaling up operations, and implementing sound business practices. His domain expertise incorporates corporate finance, management consultancy, project management, risk management with financial services as his core focus area. He is currently a founding partner of Indorient Financial Services Limited, category merchant banking entity. He has also conceptualized and built an online platform for logistics services. Well, his hobbies are playing sports, soccer, cricket, and badminton, and he's an avid reader of fictional and non-fictional books. Ivor sir, we welcome you to our forum for delivering the lecture. Next in line for our speakers is our own member, CA Ravi Ramaiya. To introduce him briefly, he is a chartered accountant by profession. He is a CISA and ISACA from USA. He is DISA from ICAI. He also holds a diploma in cyber law from GLC. He holds a management degree from Mumbai University. He has been associated with financial markets from a tender age of 17 and now currently possesses 26 years of experience. He also joined National Stock Exchange from 2000 to 2005, where he handled various portfolios like risk management, surveillance, inspections, and investigations. Due to desire of his own practice, he resigned from NSC and co-founded the firm Chai and Ramaiya Chartered Accountants along with CA Shardul Shah. He has handled more than 300 SEBI matters and has handled litigations among financial market participants worth thousands of crores. He is currently a director of SECMARK Consultancy, and SECMARK has experienced the journey of coming up with an IPO of SME segment of BCSE. I must say, as far as BCSE is concerned, wherever we have topics related to IPOs or SEBI, he is our go-to man as far as BCSE is concerned. We welcome you, Raviji, for today's forum. Warm welcome. We also would like to contribute towards the CEO Benevolent Fund for both the speakers on amount of 500, and the e-memento of both the speakers I'll just upload for a second. First for Ivor sir. You can applaud him. Everybody can give the relevant welcome to Ivor sir. Welcome you, Ivor sir. Similar welcome we need to give to as a protocol. I think Ravi Ramaiya, your screen is visible. Thank you. Welcome, Raviji. Now, without wasting much time, I would like to start. I would like to request to hand over the platform to CA Ivor. Sir, all yours, sir.
Wonderful. Thanks, Pradeep ji. And I think I will share my screen, right, to present the presentation.
Yes, you can share it, sir.
Okay, wonderful. So, I mean, look, while this is a very interesting topic, and I hope the community finds a lot of value. Whenever someone calls me sir, I'm reminded of my conversations with Ravi. And Ravi was the first one whom I heard, just referring me to as sir. And I said, look, Ravi, if you call me sir, it adds a lot of more years to my actual age. And I would prefer, just being on the first name basis. So my humble request is, I'm okay with the first name. I'm still young at heart and still a long way to go. But I really appreciate this opportunity of talking to my fellow colleagues and CAs in the community. And I think a very interesting topic, one which I hope a lot of CAs start looking at very closely and find opportunities to play a role in this ecosystem. My background, given 25 years of post-qualification experience, I spent 6 years with consulting in a firm in London, then 10 years with Morgan Stanley. And I then quit in 2016 to find a new calling in the entrepreneurial journey. And as part of the journey, I did advisory work for a couple of merchant bankers. So I got connected to some senior folks in the Bombay Stock Exchange. And there was one view which was coming out is that a need for professionals to start engaging in the whole IPO ecosystem. And I said, look, before I start taking the plunge and I make a decision, let me see what the ecosystem is all about. And therefore, I spent a couple of years understanding the landscape before me and a couple of other colleagues started Indorient Financial Services and the investment banking arm. And since 2019, so 2019 is when we got our license, and it's been a journey of 3 years. Obviously, 2 years with COVID and the disruption that's brought about. but we've kind of enjoyed our journey so far, and Ravi is one of our success stories that I'm sure we will continue to quote as we continue with this conversation today. But I'm all okay for you guys to make it very interactive. Please feel free to stop and ask questions. The way I'm going to present it is it's equity funding. So talking about a combination of IPOs and private equity and what happens in that landscape. Obviously, a chunk of the presentation is diverted towards the whole SME IPO platform. Talking about what are the rules of the game, why an equity funding or an SME platform, and what are the advantages it brings, what are some of the success stories that we've seen, and then talking about the process. I'll share some of my thoughts with you, and then we can keep it open for a Q&A. But I don't know whether colleagues from SEBI are still available on the call, but I think, and I'm sure you will hear from me as we navigate this presentation, that SEBI needs to play a lot more aggressive role in making this market more vibrant and making sure that it actually fulfills the demand that was the reason why which this segment was created. I hope I'm audible. So let's proceed in terms of the whole SME IPO segment. So the background to the SME IPO segment is in 2012, when the regulators, along with the exchanges, they felt that there was a need to allow even small and medium-sized companies an opportunity to raise funding to the public market route. Because clearly, when you look at the guidelines of a main board, not a lot of small and medium companies would ever be able to fulfill these stringent norms, and therefore there was a need felt for creating a small board. And the small board at both the exchanges came up in 2012, and it's been a journey of now close to, so BSE just celebrated its 10th anniversary last month, right? And we'll talk about, I'll share some stats and numbers in terms of how both the exchanges have fared. But clearly, when you look at why the need for a small board versus a main board, so on the main board, a couple of key criteria. One is that for the last 3 years to be eligible, these are eligibility criteria, right? For the last 3 years, you should have an average operating profit of at least 15 crores. And then your capital, paid up capital should be in excess of 10 crores, post paid up issue capital. So I think most companies struggle to fulfill that criteria. Yes, loss-making companies are allowed to list. So the likes of your Paytms or all these new age companies that have recently got listed. But in that case, the rule is that when you go to list such a loss-making company or a company which doesn't fulfill the 15 crore operating profit criteria, 75% of the issue has to be placed with a qualified institutional buyer. And then when you look at, so those was, these are the criteria in terms of the main board, and that's therefore the small board has come into existence. Let me dwell into the specific criteria of a small board. So clearly the idea was that keep the criteria very simple so that most companies become eligible to come and be eligible for listing and raising money through the small board. Right? So what these criteria are: one is your post paid up capital should not exceed 25 crores. You should have net tangible assets of at least 1.5 crores as per the last audited balance sheet. And again, some of these criteria are more exchange specific. The reason being that you can list on either of the exchanges. You can't list on both the exchanges. Okay, so exchanges obviously have some common criteria and then some very specific criteria. You should have a positive net worth. Now, in terms of positive cash accruals, for BSE, they say 1 out of the last 3 years should be EBITDA positive, whereas NSE says that you should have positive cash accruals for at least 2 years. Okay, and then there is a 3-year track record. So you need to have a 3-year track record. Now, there are companies which are today run as either proprietary or partnership or LLP. And question is whether those companies, if they convert into a private limited company, would they be allowed to list? Yes. The answer is yes, they will be allowed to list. And provided they are running the same business as an LLP or a partnership firm. So that track record of being running the similar business as a proprietary or a partnership firm will be considered in that 3-year track record criteria. Okay. So these are the mandatory or the must-have criteria that the company should fulfill. The others are that the company should have a website, but again, those criteria can be fulfilled, once we start the groundwork and before filing of the DRHP. Obviously, all the other criteria have to be addressed. So, the need to have a website, and the website should again align to the ICDR guidelines. So again, very simplistic criteria that the regulator has prescribed, and therefore most companies, I think, become eligible to list on an SME platform. What are the other rules of the game? So minimum, like it happens in every public market, you've got minimum dilution of 25%, but in the SME, it is the minimum dilution is 26.25%, wherein 25% goes to the public and 1.25% has to be allotted to a market maker. Now, again, the concept of a market maker, and given that we are all professionals, I'm sure we understand the concept of a market maker. But just to quickly touch upon the key definition. So the market maker is a SEBI registered broker, and so it has to be registered with both the exchanges as well. And the role of a market maker is that they have to provide a buy and a sell quote 75% of the market hours. So they get a fee paid for that, executing that service. Now, the merchant banker's role comes at the time of listing the company. The market maker's role will come after the company is listed. And then again, you have minimum number of subscribers that should put an application during the time of IPO should be 50. In the main board, it has to be 1,000. There is a concept of underwriting in an SME IPO. So the merchant banker has a responsibility to ensure that whatever promises have been made to a client on the fundraising, those commitments have to be honored. Right? So if there is a shortfall, then the merchant banker will have to cough from his own pocket. I think this is one of the reasons why merchant bankers are very, very selective in terms of the type of transactions they would handle and where they would be able to make a commitment for raising capital for such companies. Now, sorry, I missed talking about some other nuances of market maker. So market making is compulsory for 3 years, post which the firm can decide whether it wants to continue with that service or not. However, one of the key advantages of an SME IPO is that after 2 years, and given that you fulfill a couple of criteria, one is where your paid up capital goes beyond 10 crores and the market capitalization is at least 25 crores, you can migrate to the main board. So once you migrate to the main board, the requirement of having market making comes to an end. Right? So it's either you move to the main board or minimum period of 3 years, is basically the criteria of a market making. There is a concept of lock-in. I think these norms have now changed. Sorry, and I have not been able to update this to capture this the change. So the pre-issue capital is now locked in for 6 months, and post-issue will be locked in for 18 months. This mirrors the main board criteria. And again, SME company. So if a company is listed on the small board, for an investor who is looking at trading in such companies on the secondary market, there is no difference. So he wouldn't know whether the company is a main board listed company or a small board listed company, because all scripts are listed in alphabetical order, and that's how it works. The other requirement that needs to be kept in mind is from a regulatory standpoint. And again, some of the regulatory certifications are again kept lower than what a main board company would need to fulfill. So here, the company has to present half-yearly unaudited results. The company needs to have a full-time company secretary and a CFO on board. So these are mandatory requirements. The board of directors also have to be reconstituted, and ideally we request that the board of directors structure mirrors what is required for a main board IPO, because theoretically the bare minimum composition you would need is 6 directors, out of which 3 are independent and 3 are executive. The 3 independent directors are mandatory because you have a number of committees that will come into play. Remuneration committee, your stakeholder committees. And there in some of those committees, independent directors, basically play a larger role on those committees, right? So 3 is the bare minimum number of independent directors that you would need to have. So what we generally guide clients is that let's structure the board composition in the manner a main board company needs to be, or it needs to be structured for a main board company, wherein if your chairman is playing an executive position, then 50% of the board has to be independent, else 1/3 of the board can be independent. The other important criteria is that you need to have 1 woman director on board, and that woman director can either be in an executive position or in an independent position. I'll take a quick pause if there are any questions on this and the previous slide. Okay, I guess not. So I'm moving along.
Sir, just to
Sure.
highlight that all the questions are allowed only in the Q&A box. So if there are any questions,
Okay.
I think you will be able to see the.
Yeah,
Just
so
to
I'll
inform
keep
you.
checking the chat box
Yeah,
in case there
and
are
if
any
you
questions.
want, we can have us. If there are any questions, we will highlight it. No problem. There's one just question right now. How important is the valuation in the issue? So if you want to answer that right now or at the end, I will leave it to you.
I think we'll take it at the end because I've got a couple of examples to share in terms of how companies have valued themselves at the time of raising money to an SME IPO, right? So I think some of those valuation questions will definitely get answered, and then I'll share my thoughts. And you've got a live example with Ravi, so I think a combination of that will be able to address that question. So we'll take it at the end, or we'll take it as we come to that slide on valuation. There are other, so what we spoke about the criteria was basically for a company, for a SME company, but for other types of SME companies, as in technology companies, broking companies, and microfinance companies, there are certain other criteria that have been defined. I think the important thing to note is that, and look, if you see the table, broking and microfinance companies, only BSE allows listing of such companies. So NSE doesn't permit listing of a broking company or a microfinance company. This is not to say that earlier, so these rules have changed. Earlier, these companies were allowed, but I think based on experiences, exchanges have today reset some of those criteria. Again, for a tech company, now there is a startup platform as well, wherein a startup can come and list and raise money. Again, the criteria is that your paid up capital should not exceed 25 crores. BSE says that you should already have an angel investor on board for a minimum period of 2 years, whereas NSE says that 10% of your equity should be held by a QIB or an angel investor. Right? Some of the other track record and net worth criteria are similar. Broking business, again, a post paid up capital should be a minimum of 3 crores, and net worth, minimum INR of 15 crores with a PBT of 5 crores in any 2 of 3 financial years. So there are criteria for some of these companies to be eligible to list. Now, I think it's important to note that NBFCs are not allowed to be listed. So only if you have a microfinance company with, again, minimum book value of 100 crores and above and a client base of 10,000, would you be eligible to list? Right. So I think important to keep in mind some of these criteria when talking to clients. Now, again, another thing to highlight is a tech company means, again, they have a definition of technology. So it should be technology, either it's innovation, process development, data analytics, biotech, nanotech, e-commerce. So plain vanilla IT company may not be eligible to list on a startup platform. Okay. Now, this next question is, why should companies look at an SME IPO? And like I said in the previous slide, the main attraction that most promoters that we have seen in through our experience is that the migration to the main board, continues to be the largest attraction that promoters have to use the SME platform. Obviously, and I'll tell you why that is important, because one is, being 2 years on an SME platform, it allows the company to get acclimatized to the rigors of regulatory reporting, scrutiny, and fixing their books and making them aligned with the to manage the rigors of a main board regulatory environment, right? What you also see is that a number of companies, and again, this question would be linked back to valuations, but a lot of companies today in the MSME and SME sector primarily manage their books on a taxation model. And therefore, it is very unlikely that in 1 year you can course correct and show actual profits on books. And therefore, the 2-year window being on the small board gives you an opportunity to start addressing the margins that ideally should be and making sure that you start reflecting actual margins in the business that should come on the books. The cost also of listing a company on the small board is much lower than the cost of listing company on the main board, plus the timing, right? So it takes a good 3 to 6 months to list a company on the small board, whereas it would take a year, close to a year, to list a company on the main board. And again, I'm giving you our experience. FY21 has been a year when there has been a waterfall effect of main board IPOs, right? It's been a flood. And SEBI has been swamped, and there has been delays in the system. Plus, when LIC announced that it was launching its IPO, I think unknowingly a lot of other IPOs took a backseat, and there were delays in the system. So with SEBI, you're really not sure. But again, given that a main board IPO document gets vetted by SEBI versus a small board document which gets approved by the exchanges, right? SEBI does get a copy, but it is like an FYI only. The exchanges generally make a decision and give you an approval. And that approval comes in 2 weeks, max 3 weeks. So therefore, considering all of these factors, the small board route does become very attractive for promoters when they want to go public. However, in addition to that, there are other benefits that can also accrue. And I think what we always encourage promoters to do is try and make sure that you are identifying a good benefit to realize as part of this process. And it should not just be the migration to the main board and raising money, right? So what are the other benefits? If you are a tech company or a company that wants to reward employees by making them stakeholders in the organization, so you can give ESOPs. And those ESOPs obviously only have value when you go public and become a listed entity. Through the ESOP process, you can reduce your fixed costs and make it a more variable cost compensation model. There are taxation benefits, and I wouldn't go into taxation benefits, but I think members on this group are well aware that if you sell shares of a private limited company, there is a short-term capital gains tax. With being a listed entity, there are lower tax rates when it comes to long-term capital gains tax. A listed entity does get a benefit of lower cost on bank funding. So what we have seen is, again, half to a 1 percentage point difference on the cost of capital. Plus, the decision to go public automatically gives you branding and visibility to your company in the eyes of a very different set of stakeholders, which is the financial intermediaries in this country, right? So I think the cost that or the money that you invest, you spend on doing an SME IPO or a capital market transaction should not be viewed as a cost, but we believe it should be viewed as an investment. Now, again, if a company has ambitions to tap into larger contracts, working with large organizations, not only domestically, but also internationally, I think being a listed entity will give that company an extra edge in securing contracts. So there are a number of advantages which can accrue. And I think it is very important that promoters or clients that you talk to are very clear about what do they want to achieve through this whole IPO process or the capital markets process. Sorry, I'm just looking at the chat box and seeing whether I can take a question. 1 second.
Sir, I have answered both of them.
Achha, you have? Okay. Is there anything open? No.
No open questions. No.
Okay, great.
Ravi
So
sir
Ravi is already Ravi is already experienced with the process. So great to have him on this panel. And Ravi, please feel free to jump in. And if you want to share some of your thoughts also on slides that I'm presenting, okay? Great. So I think this is the benefit. And again, what we have tried to represent here is how a promoter should think about a journey once they start thinking about going public. And what is very, very important for a promoter to know is that, look, going public, again, becomes your starting point in that journey. So, you would have spent 10, 20 years in building a business and you were maybe at the pinnacle of, what you wanted to achieve. But when you start going public, you again come back to, the ground floor and you need to start thinking about your growth and opportunities and how you're going to scale up the business and become, a leading company, right? So very important for promoters to understand that this is again going to be a starting point in that whole journey of creating wealth. And again, now it's not only creating wealth for yourself and your employees, but creating wealth for other stakeholders like your investors as well. Sharing some stats on the whole SME IPO market. So again, from 2012, look, it's been a journey of 10 years for both exchanges. My data is updated as of November 30th. So I think today the count would be close to 600. BSE obviously has a larger share of the volume or the numbers as compared to NSE. And the primary reason is that BSE is more aggressive in reaching out and trying to influence promoters to come and evaluate the opportunities of listing and using the IPO, the small board platform for raising capital. So, people like Ajay Thakur, who's the head of the BSE SME, continues to do number of seminars and events trying to promote this ecosystem. We have, so again, looking at the companies, and again, you see, through the years, how the numbers have changed. Again, now, I think FY21, you've seen a number of mainboard IPOs. So I think those also become one of the key constraints for an SME. And I'll share some of my thoughts there. But, when you have a lot of mainboard IPOs, the intrinsic, intrinsically, investors will think of investing in a mainboard IPO rather than a small board IPO, right? And we've had a similar example or a similar situation when we listed SecMark. So during the window when we listed SecMark, there were 3 mainboard IPOs which were happening concurrently and significantly large IPOs, right? And so if you ask an investor that, look, you have to invest a minimum of 1 lakh in a small board because of the lot size concept versus you investing 10 to 15,000 in a main board, where would you put your money? And automatically, you find most investors putting money saying that, look, I'll take a 15,000 bet, not a 1 lakh bet, right? So that becomes some of the challenges that an SME market faces. But through the years, I think what we've seen is the most appropriate IPO size to be able to target in this market is between 10 to 25 crores. Because that size not only gives you the best, in terms of the cost of raising that capital, but also the best, it is more feasible to raise that amount of money, right? Anything more than that or anything less than that would not be cost effective. Anything more than that, you'd struggle because of the nature of the market. And given that liquidity continues to be one of the key, challenges in that market, right? So today, no doubt, you are seeing investors come in and you're seeing a lot of retail participation, but retail participation doesn't give you stability. You need more of the institutions and the more knowledgeable investors, the more professional investors to play a role. And that's what is missing. So again, I think once that starts, gathering pace and if that creates a solid foundation, then maybe you'd start seeing consistently IPO sizes in excess of 50-100 crores at least. Again, in terms of the footprint, you've got companies across mostly western and northern regions that have leveraged and used this market, less so from the south and going east. And I think that again is it's because of, again, given that people in the West, North obviously understand capital markets far more easily. It's been in their bloodstream, I think, for them to gauge the depth of and to understand the nuances of the capital market. So it's easier for them to understand the benefits. But when you talk to clients from the south and going east, this is mostly a new concept because they usually invest a lot in fixed deposit, real estate, gold, and equity doesn't become a natural asset class for their investments. So that's on And again, if you look at the sectors covered, so you find companies across the sectors that have tapped this market to raise money. Okay, so it's not like concentrated on a particular sector or industry, but it's across the board. But yes, some sectors have done better than others, like you find a number of apparel accessory companies, manufacturing companies, less so trading distribution, but manufacturing would probably have a larger share. I'm just going to quickly check the chat box and see if there are any questions. So the question is, in SME IPO, how is the promoter screened as we do for financial due diligence? No, look, so the rigor in an SME IPO, irrespective of whether it's an SME IPO or mainboard IPO, the rigor, the merchant banker will use the same amount of rigor and diligence when evaluating a transaction, because at the end of the day, the DRHP has to be, there is no difference in the way the DRHP has to be prepared, right? So you've got all the business chapters, the risk chapters, the litigation chapters. So the due diligence is going to be at the same level that happens for a mainboard IPO. Okay. So yes, all the intermediaries involved, whether it's the merchant bankers, legal, the CA, the chartered accountants, will have to ensure that there is complete clarity in terms of the numbers being presented, the business plan being presented, and all of the information that goes into the DRHP. So if there is limited info about a promoter and a client, then unfortunately, I think merchant bankers will be reluctant to take on such clients and try and do an SME IPO for them. Because at the end of the day, look, if you want to raise money, you have to go and talk to investors, and investors will need to be convinced that there is a very strong story and business is being run very ethically and with all transparency, right? I think one of the biggest challenges that you have today in the Indian ecosystem is finding credible promoters and promoters whom you can trust that they will run their business ethically. Sorry, I want to share some quick examples and success stories. And I think one of the honest views that we have to share is that if you have had 600 companies listed, fundamentally 10 to 15% would be success stories, as in they have actually listed, they have actually raised money and gone on to deliver value to their shareholders, right? Because like I said, look, a lot of other promoters, they look at this market as an opportunity to get into the main board and then try and do value unlocking once they get into the main board and not necessarily on the small board. In the small board, I think if any client wants to list on the small board, fundamentally, I think they'll have to be very clear that valuations will be at a discount. So let's look at Suyog Telematics. This is, I think, one of the first companies that listed in the initial years when the exchange was set up. So listing in 2014, if you see their revenue numbers, right, 8 crores, net profit of 1 crore, EPS of 2, and company listed with a PE ratio of 11 times. That gave them a market cap. So they raised around 4.5 crores, gave them a market cap of 16 crores. And over the years, they have seen growth. So today, I think in FY21 numbers, 130 crore top line. If you look at the market cap, right? Market cap is today 430 crore. I think maybe slightly less than that. But significant that, so what happens is the PE ratio becomes a significant point of discussion with promoters. Promoters think that, look, they always expect price to earning multiple in the high 15-20% ranges, 20 times ranges. But I think clearly, if you see the statistics in the market, companies that have priced themselves very, very attractively and kept money on the table for investors will generally do very well in terms of their overall market cap and the ability to attract investors in the long term, right? So, and what promoters need to be very clear about is, look, out of the 430 crores of market cap that your company today enjoys, 75% still belongs to you, right? So this is on Suyog. I want to take one, we can go through Chemcooks as well. So again, this is a company that listed in 2017. Again, when it was listed, a top line of 13 crores, EPS of net profit of 1 crore, EPS of 3, and a PE of 6, right? So they priced this very, very attractively at a PE multiple of 7 times profits. or the EPS, and then the market cap of at the time of listing was 7.5 crores. Today, obviously, the chemical sector has also done very well because of the China factor. The top line has grown, profits have grown, and today you see market cap of good 170 crores, which is more than 10x, right? So again, what you want promoters to understand is the market needs to reward you with a PE multiple and not necessarily you rewarding yourself, right? So that's the point where a lot of discussions and a lot of deals break up at the valuation stage. EKI again is a phenomenal story, and I think people who are not aware of this should read up, because this company in 6 months went from 75 crore market cap to 4,000 crore market cap, right? And if you look at when they listed, top line of 59, 60 crores and a market cap of 75, and they listed at 7x of their FY21 profits. And they have had a phenomenal journey because one is their revenue numbers just shot through the roof. The company announced, I think after listing, they announced a JV with Shell. And the revenue guidance was that, look, they would do in excess of 1,000 crores. I think FY22, I think the expectation is that they would cross 1,000 crore revenue. And so their market cap has just shot through the roof. So I think people who have invested in this company are sitting on fabulous profits at this point. So again, all of these examples just highlights that promoters should not be worried about valuations. They need to make sure that they're leaving enough on the table for investors. They're not benchmarking themselves to mainboard companies or companies that have been listed for at least a few years or even for a decade, right? Because today, if an IT company comes and talks to us and says, look, Infosys is trading at 29x, I want at least 20, not possible, right? Because you have to be realistic. Infosys has been in the system for a long time. They have delivered on to their shareholders. You are a new company. You have to start, showcasing yourself and being able to deliver results in the public domain. That's when investors will reward you. Sorry, on the Q&A, look, you can get any SME listed company will be updating data on the regulatory platforms. So if you go to BSE or NSE, you will get the latest financials. Now again, as I've said, the landscape of investors has constantly, been improving. So today you have a number of players who, if there is a quality transaction on the table, then there are investors who will be willing to put money. But like I said, again, the bottom line is that how much, are the promoters willing to leave on the table for an investor? And if those numbers look very, very attractive, then I think, at least I can talk about Indorient, and Indorient will be able to bring in quality investors to the table. So how's it done in terms of the whole SME process? So your starting point. So again, like I said earlier, it takes 3 to 6 months. If you're raising money, definitely 3 to 6 months, because you have to, do a lot of road shows and discussions with investor groups. The starting point is when a client makes a decision to say, look, I want to explore this opportunity. The first point is to talk to your advisors. So, talking to your chartered accountants and then bringing on board a merchant banker who will be able to explain the process. The merchant banker then takes the ownership of handling the process end to end. So all of the intermediaries that are required to be associated with the process, the merchant banker will identify, and in consultation with the company and the advisors, will bring those intermediaries on board. Like you have legal counsel, you have the RTA, you got the sponsor banks. So all of that will be brought on board. The first milestone is getting the DRHP document ready and filed. Once that is done, parallelly, then we start, reaching out to investors and presenting the company, and start making decisions about the pricing of the issue. Again, this is a more detailed representation of the timeline. I want to now also talk about what, from an Indorient perspective, how we look at transactions, right? And I think, like I said, for us also, it's very important that we only take up transactions when we have the confidence that we will be able to raise the money that is required by the client. So we will evaluate the client thoroughly, looking at his audited information, the financial projection. So everything starts from what is the amount of money that the client wants to raise. And then you start working backwards and trying to assess whether, look, given at the stage at which the company is, the amount of capital that is required, how quickly the money is required. We kind of help and advise the client on whether public markets are the best route, or should we look at other options of financing, right? So sometimes maybe public markets are not the most lucrative options to raise money. And so generally what we would do is we would come in as advisors and working with the existing chartered accountants of the client, help the client make a decision. And if we believe that, look, an IPO is going to be attractive and will be, we can execute that successfully, then we will obviously propose that. But again, our assessment also thoroughly involves, looking at the sector, the company, what is the promoter, their vision, do they have a strategy? And again, how do they intend to deploy the money? And all of these factors will play a role in making a decision to go public. Great, so that is about SME. I just want to check whether there are any questions. Yeah, and I think we'll be able to share the presentation materials. So that's not a problem. Okay, I just want to quickly spend some time on private equity. And again, I think most of you would be aware of the whole private equity landscape. So this should just be a quick refresher. When you talk about private equity, and then there are a lot of jargons which are thrown in the mix: seed capital, Series A, Series B, Series C, D, Z, late stage. So again, these are basically depending upon the quantum of investment that you want to raise. I think it's kind of categorized as early stage to late stage. So less than 150,000 would be seed or early stage investing. And then as you keep raising larger amounts of money, those numbers will, it's kind of defined accordingly. Right? So that's how it works. And again, the evaluation process is very, very similar to what you do in a capital markets, except for the fact that you don't have a RSP which is done. But otherwise, the whole diligence, and you're given it's a bilateral transaction between the client and an investor. Obviously, the discussions are restricted to that extent. But you will have, the initial conversations, the investor saying, yes, look, I like the story, putting a term sheet on the table. Once the term sheet is agreed and the nuances of the transaction are agreed, then the investor will do a thorough diligence of the company. And once if there are no red flags in the diligence process, then they will start executing the shareholders agreement and the share purchase agreement, and then close the transaction. So this again takes a good 3 to 4 months. That's been our experience. Again, so we also like I said, once a client comes to us and says, look, we want to raise money, and we need to evaluate very clearly whether a private equity transaction would work best, a public market would work best, or a debt would work best. We go through this gamut of steps to ensure that we understand the company, we understand the need, we are clear about the positioning, and how you can take it forward. So again, even for a private equity, the same set of rules will apply. The company will be assessed on what the vision is, how companies in the similar sector are doing, what is the USP. So a lot of startups raising money today, a lot of investors are very keen to know what's the proposition. Do you have a moat? Could there be a barrier to entry in terms of what you are building, right? On the flip side, I think with private equity investment, I think clients need to be very clear that there'll be a lot of reps and warranties. So investors will generally demand a board seat. If not a board seat, then an observer seat. And an observer seat will play a role when it comes to any reserved matters. There will be an exit clause. You will have to give the investor an exit. And there'll be a commitment of a minimum ROI. Plus, if there'll be other rights like tag along rights that will be a part of those contracts, right? So a lot of clients or promoters are generally very wary with some of these investment conditions. But I think the flip side is that a private equity deal would probably give you a better valuation as compared to a public market. So the trade-off is valuations. Yeah, so Jabir, I kind of agree to this comment. I think, and I think you'll have to look at it from industry to industry, because today there are certain industries which are the flavor of a private equity landscape or a community, right? So if you talk about specialty chemicals, you talk about direct to consumer businesses, you talk about logistics, you're talking about retail, e-commerce. Now, these are all sectors where private equity investors are willing to put in the money. And therefore, if there are any clients who are in such businesses, I think the first important thing is to evaluate a PE funding route and see what is possible. Because like I said, you would get better valuations and from a private equity investor, and then consume the money, grow the business, and maybe you will then become eligible to do a main board listing at some stage, right? And give the investor an exit through that route. And again, I think, corporate governance and some of the other things, the private equity investor understands that, look, being a small company, you would have all these inherent issues, and you would need, to address them as you continue to grow the business. So I completely agree. I think if the client is in an industry which is the flavor of the private equity community, then you should definitely look at that option first. Now, again, I'm just sharing some statistics on private equity. So again, 2021 has been a record-breaking year for this industry. You've got 79% growth, investments of 67 billion in 2021 as compared to last year. And I think today India ranks number 3rd in the startup ecosystem, so overtaken the United Kingdoms. E-commerce, obviously, being the largest recipient of private equity money, put 15 billion invested over 176 deals. Next comes, so you've got, in the e-commerce segment, obviously you've got the likes of Flipkart, Oyo, and all these big, e-commerce giants that have continued to raise money. Technology is next, again, raising around close to $15 billion across 200 deals. And then you've got fintech, which has seen an investment of close to $11 billion. And if you see the whole ecosystem today, India is the world's fastest growing startup ecosystem with over 80 unicorns, right? So that's phenomenal. And I think at some stage, these unicorns will be ready for a main board listing. So you've already seen a lot of deals in FY21. And that's what you also talk about exits, right? Even when you talk about exits, this year has seen a record number of exits, with more than, I think, $40 billion being realized via exits alone. And exits were either because through a strategic sale or exits to other, so between the private equity world, between VCs, PEs, and exits via IPOs. So you've got the Paytms, the Nykas of the world, which have given exits to their investors via IPOs. So all in all, I think the whole private equity investing landscape is looking very, very dynamic and robust at this point. Great. So that, I think, covers the topics I wanted to present. I just want to share some thoughts on when we talk, and these are based on our experiences. So 2 more slides. I think one is talking about concerns, and then I think I also want to share some thoughts, opportunities for our community to look at this whole ecosystem. So when we talk to clients, why are they concerned with equity financing? They think that, okay, look, it'll lead to an increase in regulatory oversight. Right? And sorry to say, but here I think, or I believe that our community, the CA community, has a very important role to play, because I think the way, when you look at Companies Act, how the Companies Act has changed, taxation, GST, I think everything, the whole regulatory landscape is getting very, very digital. And there are very, I think whether you're and I may be wrong, because I don't, not directly involved, as a CA firm, but I think whether you are in the private domain or in the public domain, those lines are getting blurred in terms of, what amount of disclosures are required and what is the level of compliances you need to do, right? So I think regulatory oversight is a myth. I think whether you're a private limited company, you would go through the same amount of rigors if you want to raise capital in the near future. So I think more or less it should be the ambition whether you want to grow or not, and not be worried about a regulatory oversight. They believe that, look, it will lead to increase in operational cost, which again, yes, there's a slight uptick in cost. You have to bring in some professionals on board, a company secretary, a CFO. But I think all of these in the long run, again, it all ties up to, do you have a vision to grow? If you don't have a vision to grow, then obviously you wouldn't want to incur additional cost. Else, I think these would, get covered in the value that you'd be able to generate over a period of time. Loss of business confidentiality, again, I think everything is in the public domain today. If I want reports of any private limited company, I can go to an MC website and pick up the information. Yes, we can't do information of a partnership firm, but some of those entities would struggle to raise money. Right? Takeover threat, again, not, I think, except for one or two instances, and the most recent one with the whole Reliance Amazon fiasco. Very few cases where actually there's been a hostile takeover in this country. The next one, is it too early? My company is too small. Again, I think this question is best left to the experts to help the promoters to understand and decide. Significant involvement. Look, if you're going public markets, no public market investor is interested in running your business. They don't even come on your board. Yes, private equity will come on your board, and they will. But I think the important thing is to identify a good private equity investor who will add value to the business, right? So there should be some meeting of the minds, and even private equity investors, they only invest in businesses where they can contribute, because at the end of the day, look, they have to also realize the value of their investment. And then the last slide is opportunities. So I think, again, we as CAs, we talk to a number of clients, we work with a number of clients, and I think it's important for us to assess whether we can be a catalyst in helping that client become a global company, right? And how we can manage the aspiration. Because what we find is, look, a lot of maybe the earlier generation had had limitations, but the new generation that is entering into business has aspirations and ambitions. And I think that's how you need to start looking at your clients and seeing whether there is an aspiration and ambition, and can we start identifying opportunities for them to realize those ambitions. Obviously, all CAs, they play a role of an advisor, and they become a link in the process. The other opportunity is, look, if you've got a good, strong client for whom we are able to raise money, I'm sure we as professionals can look at even our network, and we would definitely have a pool of investors who would be willing to put money in such companies, right? So the company in and out, what are the strengths of the company, the potential of the company, that you'll be able to realize a quality return on your investment. So with that, I want to just close out. I'll be happy to take questions. Sorry. So again, a couple of more thoughts to share. I think the regulator needs to do a lot more. Like I said, liquidity is a problem in this market. So when promoters, when they come to us, so again, valuations get driven by what is on your books. If you're earning 10% margins in the business, but you're only showing 2%, 3%, valuation will be done on 2%, 3%, and not on 10%. So sometimes what happens is promoters do not like the valuation numbers. Then it's up to them to say, look, this is the merchant banker can say, we will only be able to do this. Now, if you want more, then it's up to the promoters to look at options to raise the money, and they can look at an opportunity to say, look, let's list the company, and then take it, do a further round of fundraising when the company goes into the main board after 2 years. And the 2-year period, helps you fix your systems, processes, and it helps you to also engage with the financial intermediaries in the country and start creating a legacy for yourself, right, in that marketplace. Sorry, a question from Jabir. I think, what is the current? Yes, so a lot of main board IPOs, they are doing offer for sale. You wouldn't find too many SMEs doing an offer for sale, because SMEs inherently, I think the reason why they come to the capital markets is because they want to raise money. And therefore, you should expect that primary is the fundamental reason for doing a transaction. We would be very nervous to do a transaction where there is a significant portion of OFS. And I think investors also will not be very comfortable with transactions where there is a higher percentage of OFS, especially for the SME segment. There's another question from Ms. Chal, I think post SME listing, can a startup go for private equity funding? Okay, again, this is based on our experience. Look, private equity funds do not like you to go public. They want to keep you private till the time that they want an exit. By when they will allow you to go public. They will only allow you to go public because they want an exit. So if you're a listed entity and you want to try and raise money through a private equity, the chances are you will struggle. Sorry, I'm open to take questions.
Yeah.
I think all the questions you already taken from the Q&A box. I think there was only one question which was there in the chat box, which was what could be the minimum and maximum amount of some issue. If you can share some examples.
So, Pradeep, like I said, look, the sweet spot would be 10 to 25, 30 crores is, an IPO size. Now, benchmarking is, again, if you say that reasonably between 8 to 11x or P multiple. So you're looking at a business that is able to, generate at least 3 crores of profit and above, which would be an ideal candidate to try and raise money through an SME IPO. So at a valuation of say 30 crores, which is 3 crores profit, 10x, 30 crore valuation, 25% dilution, 7.5, right? Starting point. And then it can go up. I think, but when you start going beyond 30, 35 crores in terms of the amount of capital that you need, then I think it will have to be evaluated on a case-to-case basis to see whether there will be an appetite and whether it will be possible to raise that much quantum of money through an SME listing. Because look, there's been another company. So again, what I thoroughly believed is an SME market should have been able to support transactions which a main board cannot. So a main board should ideally start at 200 crores and above. So anything less than 200, you should have been able to do on an SME. But unfortunately, because liquidity is a problem, and then your large institutions and qualified institutions don't come and actually invest very aggressively in this market. So, you've never been able to reach that limit. But today also you have, say, prime example is Likhite Infrastructure. I think listed 2 years back, raised around 60 crores from the main board. And very, very attractively priced. They did 11x of last run profits. So yeah, I mean, you can do small sizes on the main board. Obviously, there will be a higher cost incident, but that's okay. But I think merchant bankers will be very keen to do that because look, there's an underwriting obligation, right? So the larger the issue size, the larger is the risk on a merchant banker, to make sure that the issue becomes successful.
I think fair enough, sir. Just a question. I would like to now hand over the proceedings for the second session to the next speaker, CA Ravi Ramaiya. Just a small question to Ivor sir. Sir, you will be staying for the entire session, no, Ivor sir?
Yes, I don't mind waiting for Ravi's session because I'm very keen to hear his experiences because he and I have not had a chance to talk.
No, I was asking you this because we are required to give you a formal vote of thanks.
Yes.
We can take it at the end. So, or you want it right now? Sure.
No, I can take it at the end. Not a problem. And we can also, if you want to do a Q&A at the end, you can still. I'm happy to hold on.
No, we'll continue, sir. Your inputs would be surely welcome. So, if there are further questions on the topic related, you or Ravi sir, both, either of them can take it up. So, Ravi, now I would like to hand over the proceedings to you and take it over. The stage is yours, Ravi.
Hi, thank you. Am I audible?
Yes, sir. Yes, absolutely.
Absolutely.
Yeah. So I have one small request. If you can stop the screen share, please. Yeah, that's it. It's been a privilege to join as a panelist on this BSc CPA study circle meeting. And I am a family member of this study circle. And I have been a member since God knows how many years. And it has always been a very cohesive group where all the members support each other in all the initiatives. And today I have been called upon to share the experiences of Sigma Consultancy Limited while it went through the IPO journey. So I have broken it into three parts predominantly. I have no presentation at all because it is all what has transpired live with me. And it was not worthwhile to share it in the form of a PPT. The personal interaction would be even better. So first is the initial stage when the company starts off its business and starts growing to a particular level. Now that in itself is a groundwork that that entrepreneurs do to take it to the next level of even thinking for an SME IPO. So right from the initiation stage, the promoters have to have certain qualities, like they have to be very transparent with their customers, their employees, their relationship management, and relationship with anybody and everybody who is there, whether as a consumer or as a team member or as a support or a vendor as well. Now, this is the first part of it because that establishes your entire ground for credibility, which goes on to add up to your possibility of having a successful IPO. Then comes a stage where you reach a particular level where your efforts have been enormous, but then the growth is dependent on a little bigger boost of money, which is required to come to you, based on which you can, whatever ideas you have envisioned can be fulfilled. Now, goals have to be very clear in your minds as to what is my long-term vision and how I want to achieve that. Post that comes the size of the IPO. Now, size of the IPO predominantly has to focus. I'm talking from the promoters angle right now, and also from the investors. I'll give you a brief on that in the second part of it. So from the promoter's side, you have to be very sure that for reaching a particular milestone, how much money you will require. And this is very important because if your money gets exhausted before you are at your milestone, you will end up diluting at a very ridiculous price. So you have to be very, very clear that if I have to achieve a particular goal, like if there is a plan that I want to put in place, or if I have to reach a particular milestone, then what is going to be my cost? What is going to be my sources of funds, and how much I want in the form of equity dilution? So once that is very clear, you have a target that I have to raise an amount which is X. Now for that, there are various peer comparisons, like you may generally have a IPO PE band of a particular amount or particular number, like 11x, 12x, 15x. But then people who invest in SME, they also understand that these are companies which have extremely large growth potential. And at times when people are in good connects, you can even take a chance with higher multiple if you want that particular amount to be collected in your kitty. Because if that is not done, you will be just halfway through your milestone and then you will be nowhere, neither on the other side nor on this side. It is a difficult position to be in. So to tell you very frankly, we did a reasonable survey before we went off for the IPO. And our IPO had come up at a valuation of 55, which is almost 5 times the valuation that generally the companies get. Now, why was this IPO? It was not, why was this P multiple requested and subscribed also? Was not because we wanted a lot of money for ourselves to ourselves. It has all gone into the company. Second is that based on that funds, there is bound to be a exponential growth, and that people who invest in such segments are able to foresee. And of course, our price had gone down to levels which were much below the IPO price. But then the markets have shown its faith in the results that have come after the IPO, and those results have been encouraging, which has resulted in prices reaching all-time high right now. So this is one area where you have to decide on the pricing. Now, when we talk of the shareholders expect value in SME segment, not immediately, but then of course in a reasonable period. Reasonable period for any investor in SME should be 3 to 5 years, within which they can expect a very handsome gain. This is a little high risk and high return kind of a scenario where if there is a chance of gaining a lot more, there is also a chance of losing, because see, the companies which go on main board, they already have a particular scale. The companies in the SME segment, they do not have a scale which will allow them to reach there, reach the main board IPO. So the risks involved that the promoter failing or such kind of things happening is little higher in SMEs, whereas in main boards, the companies are of a substantial size, so possibility of failure is little less. So investors, they generally expect a very handsome return within 3 to 5 years, and it is the responsibility of every promoter to try and ensure that they fulfill the desires of the investors in a reasonable period. Now, for that, the tireless and tireless effort of the promoters, along with transparency and utmost compliance, is very important. Now, this is all about pricing and how the investors see the SME IPO space. Next comes the issue process, and we have been very lucky to have Ivor and Soumyakant Paddy, who are the co-founders of Indorian, as our merchant bankers. In fact, this was their first merchant banking transaction, not just the first IPO, first merchant banking transaction what they did. And we had a lot of faith in them because we had participated with them in the entire journey of getting SEBI license, and were very confident based on their experience as well as expertise, because as Ivor said, though this was a new entity for him, he already had a lot of experience in doing SME, doing capital market transaction, fundraise, and all those kind of things. So we were lucky to have them. Now, lucky, why I will tell you is because, see, having a good merchant banker is imperative, because you will see in many instances, merchant bankers have taken promoters for a ride, and they get into all sorts of activities like मैं यहाँ place करा के दूंगा, वहाँ ऐसा adjustment कर लेंगे. There has to be an absolute no to any kind of compromise, both from the merchant banker side as well as the promoter side. You should be ready to accept failure rather than going on the wrong side. And this I remember because on the second last day, only 59.5% was subscribed, and there was only 1 day left for our IPO. We had also a short discussion with Ivor, and both of us were very clear that if it does not go through, we will withdraw, but we will not go the wrong way of getting bypassed applications or back-to-back kind of arrangements. And that is very critical, which is a decision to be made at that point in time. You don't have too much of a time to think. You are always motivated to go the wrong way, because that will ensure the success of your IPO. But then not going that way is much better off, and this I am sharing with the practical experiences. So once you have a good merchant banker in place, they generally put in the entire team, like the team of the lawyers who do the due diligence, and you of course have the statutory auditors who will have a pivotal role in the drafting of DRHP, giving correct disclosures and all that. And as promoters also, one has to be very vigilant. He has to, though DRHP is a 300-page document, we took pains to read each and every comma and full stop in that. And it was an insistence from our merchant bankers that you ensure that whatever is being submitted is already vetted by you. So there you cannot cut corners and you have to burn the midnight oil to ensure that everything that goes in the DRHP is correct to the T. Then comes the subscription stage where your IPO actually opens up and investors, they will start applying to your IPO. Our merchant bankers and some of our brokers who were selling the IPO, they were quite confident that if on second last day you have 59.5%, you will surely sail through. But because from their experience, they have seen that equal amount of applications come on the last day because nobody prefers to deploy the fund before the last day of the application. But for us, it was a day of a lot of nervousness because we had never experienced this journey. But then Ivor had given us a lot of comfort at that point in time. And otherwise, we were prepared for the worst, like I said. So this is how the entire subscription would go through. Now, getting subscription is not just the responsibility of the merchant banker. The promoters have to be equally participative, and both of them, they have to put their best foot forward to bring in investors. You will have to do seminars, road shows, meet the investors, bring in whatever contribution that is possible. And every smallest application is very precious at that point in time. And ours was the first batch of IPO which went through in COVID because up to September 18th, I think it was, September 17th was Shraddh Paksha going on. And from 18th, 4 IPOs had opened. So Chemcon, CAMS, Angel and our IPO, all 4 had opened on the same day. And a lot of capital in the market was sucked in by these bigger IPOs, but then we could sail through because of the joint effort of merchant banker and our active effort to get in touch with all our contacts and request them to subscribe to the IPO. So this is now the IPO gets filled up, and in our case, it was 1.25 times over subscription ultimately on the last day. And post that, the journey has been completely different. So our merchant bankers and the market makers, they were always telling us that it will be a different ball game once you have gone through your IPO, not just because you have some compliances to do or not do, that is one, but then you are someone whom many people look forward to because they have invested their faith in you. See, SME IPO is not about thoda paisa dala or mil gaya. It is not a 15,000 worth of application or 10,000 worth of application. Someone who puts in more than 1 lakh, he has bestowed a lot of faith in your company at that point in time, expecting, and he rightfully expecting that he would get good results from the company in days to come. Now, post that, the real effort starts. In fact, when we thought that we had crossed the milestone of full subscription and IPO listing, post that our effort towards the company has also increased, and it gradually ensures that you are fully exhausted throughout the day, ensuring that the company is on your growth path and achieves its goals which are there in the IPO objective. So post the IPO, the markets have also been markets does not mean stock markets, our customers, whoever are there. And we have seen an unprecedented growth in the business in last 2 years. So we have already come up with 3 half-yearly results which are there, and those have been very encouraging results. Of course, the full year result I cannot discuss right now, but the earlier 3 results were very encouraging, and which has resulted in the stock price reaching to the heights that it has never seen till now. And in the process, because of the IPO money, we could also do 2 acquisitions now, and the total value of those acquisitions is close to 25 crores. These are in public domain, so I can speak on that. And so this is how the entire journey has been. The advantages, what we read in the books, are just a small part of the entire advantage that a company enjoys after listing. There are several things that we read, like there is a lot of credibility attached. People tend to see you as a good corporate governance company. Then there is a employee retention by way of ESOPs and all those. These are all academics which are already there. But then when you actually experience this entire journey and you see your team getting more involved automatically because of the possibility of those ESOPs, and their retention becomes little easier. Now, in fact, there are two types of people in the market. One is the people who are themselves entrepreneurs and come up with the issue. Second, and the very critical part of the market, people in the market, is those who now trust these entrepreneurs and join their company as employees and team members. So post the IPO, we have been able to engage more than 8 people having vast experience in the stock exchange, which we would have never otherwise thought of. Not because we did not have the money to pay them, but because they would not have perceived this kind of an opportunity if we were not listed. We are also in touch with several other market experts and people who are ready to now join the company. Now, this entire business is all about the human touch, and ultimately it is humans who drive the business. So once you have this kind of an IPO and once you have a team which is able to take you to the next level, your journey becomes much more safer. Though of course it is not easy, or it is not very comforting. It is very, very demanding journey. But then the possibility of success becomes much higher because people see this company as a possible growth prospect, which will gradually move on to the main board. Then there would be a lot of interest. And then good team members who would otherwise not join your company are open to joining your company. So this is a very big benefit which generally people don't discuss. And I think that is one very important advantage that we have been enjoying in last 2 years. With 8 critical members coming, the business growth has been entire credit goes to these many new team members who are able to bring new business to your company. So this is all about collective growth of the company, which comes the first and the foremost, then the shareholders, then the team members and the employees. And ultimately, the vision is to have a company which people would look forward to as a good company, standard, transparent company, and a company having good growth and success in days to come. So this is all about the entire journey that we have experienced in last 2 years. So, and we are very thankful, and we all should be very grateful that we are in India, where we have opportunities to raise such capital. See, there are so many places and countries that are deprived of such opportunities. We say US में बहुत opportunity है and यहाँ है वहाँ है, but then India is a place where you have infinite growth opportunities. You may have infinite opportunities at other places, but then two infinites are always equal. And so the sky is the limit. And as chartered accountants and as the participants of growth of all companies that are there in India, all growing companies or grown companies always have one community which is called chartered accountants, and we are all proud to be chartered accountants ourselves. So CAs have a pivotal role. Ivor has already covered it. And one is that whenever you are trying to get your customers or clients to through the journey of capital raising, be it equity, be it debt, be it SME, be it private equity, always ensure that you are charging a reasonably fine and good fee which is desired and respectable. At times we think twice before asking whether should I ask this much money or we should not ask for this much money for this kind of professional service. There would be others in the market. Just forget all those things and ask for what you think is a right number. Don't think twice. And people are there in the market who would prefer to pay the fee that you are demanding. Only thing is they expect services of the standards that are demanding for that particular assignment. So with this, I think I am fine with my kind of discussion, and just in case anybody has some questions or anything of that sort, then I would be very happy to participate in that. Over to you, Pradeep. I am through.
In the Q&A box.
No questions, sir. You can take over, Vijay sir. I think Vijay sir has some network issue. He is not able to take over. So you are here, Vijay sir? Vijay sir, you are not clearly audible. Are you there, sir?
Pradeep, you continue. Pradeep.
Okay. Thank you. Thank you, everyone. Thank you, Vijay, for sharing your experience on this topic of your going through the IPO and what all things are to be taken care of. What is the role of the person who is taking part in the IPO? A valuable experience for the future, for our future enthusiastic chartered accountants who are likely to take over to the IPO route, the SME listing route. I think we have to end today's session here itself because unfortunately our next speaker, Anand Singh, is not able to join us because of some medical exigency. He was going to speak on the fundraising to NCDs. I think we will take over the topic at some other suitable time. We are extremely sorry for this inconvenience to all our members. We are extremely sorry for this. Yes, sir.
If Ivor or Ravi, just for 5 minutes, if they can explain something fundraising through NCD.
Sir, if you have any expertise, for NCDs, if you can speak for some time, I know it may be some out of topic, but if it is possible, you can surely do that.
No, I would give it a pass because I think it's best to have the right level of information rather than, more basic information, because that is a little bit complicated. I am more of an equity specialist. So I would prefer not to venture into that domain.
No,
absolutely right, sir. We really respect your opinion and thank you very much for bringing us here. Now, without wasting much time, I would like to ask CA Neeraj Vasa to give a hearty vote of thanks to both our speakers, CA Ivor and CA Ravi.
Thank you, Pradeep. Thank you very much for giving me this opportunity. Basically, today we have two eminent speakers, CA Ivor Misquith and CA Ravi Ramaiya. Basically, it is a very tough for giving vote of thanks for Ravi, because normally today we have to buy out that it is Ravi sir and not Ravi, because for last
I am still the same Ravi.
Yeah, last 10 years for us it was Ravi only, but today really we buy out that yes, it is Ravi sir today as the eminent speaker. So friends, definitely everyone will agree that today on our topic of SME listing, they have really carved a roadmap for fundraising by business entities and a role of a chartered accountant in this field. They have explained us regarding private equity opportunities for CA, learning from personal experiences. Ravi sir has shared his experiences on SME IPO listing. We are really, really thankful to both the speakers for giving their valuable time and really thankful for your nice presentation. I, on behalf of Borivali Central CP Study Circle, propose a very well-deserved vote of thanks to both of the speakers with a loud round of applause. Thank you, sir. Thank you very much, sir. Thank you. Yes, Pradeep, over to you.
With this, we end today's session. Thank you very much, members, for attending in large numbers. Thank you very much.
Thank you.
Thank you very much for having us.
Bye.
Yeah.
With this, we end today's seminar. Please. Thank you.